G'day everyone, welcome back to Pete's Investing. Today is March 25, 2023. This is the spot gold price update. As you can see, we've drawn these support and resistance lines on the daily. This has got the daily, the 4 hourly and the hourly charts side by side. And we always follow well, not always, but one of the main indicators we follow is the CCI 1500 with the moving average 400 applied to that. So we always try to trade in the direction of the larger time frame. So in this case on the daily, the moving average is in a long bullish position. Likewise, so is the 4 hour and the hourly chart. So primarily long positions only, avoid short positions. So what we're looking at here is, you can see here it's reached this key resistance area. And on the 4 hourly and the hourly, you'll see there more closely, it's bounced off almost that area. I've drawn a Fibonacci retracement here. You can see the price on the 4 hour chart has rebounded off the 38% Fibonacci retracement and made further advancements, but it hasn't made new highs. So that's a warning sign that we may be reaching this key resistance area. On closer outlook here, if it does break that resistance, I've drawn a Fibonacci extension there. And typically where that goes is around about 123% extension on the Fibonacci in that range there. And it can go higher, but in this case it's just fallen short of that 123% level. What I will do as well, I'll make another Fibonacci retracement in that smaller time frame between that level and that high. You can see there it's come back down, broken below the 23%, and it looks like it may proceed further towards a 38 or even a 50%. If it breaks below the 50% level, then it may also, then it's most likely going to drop below the moving average of the CCI 1500. So avoid going long at this point, but just be mindful that we may see a bit of a weakness in the short term. We may just need a bit more of a retracement before bouncing further to the upside. Now, in terms of trading ideas, I've got here in the short term on the hourly the latest. Well, let me just drill down on this one more closely. So you can see there, one second, let me just get to the end of the bar there, to the end of the chart. And let me let's remove that Fibonacci just to make it a bit cleaner. So you can see there, each of these points where it breaks above the fractals would have been a potential entry long. And why would you go long there? Because it breaks above the fractals, and you're also in a long position on the CCI moving average on a daily, the 4 hourly and the hourly. So that could have been a potential long entry. Likewise there. And what I try to aim to do is, you can use any variation of an exit strategy. One exit strategy may be when it falls back into the fractal cloud, or you may want to have a change of against a moving average change, or even a percentage or a monetary gain. So just that exit strategy can be applied. There's various exit strategies you can apply based on your risk appetite. Looking back here, that would have been another potential entry had you entered early on in this up move on the moving average CCI. That would have been a nice little entry point up there. But moving back further into in the field, I want to show you another potential. Again, going back to around January, start of this year, 2023. I've marked that spot as a potential ideal entry. And why is that spot important? Is because if you go back to the start of 23, you can notice there, that was our previous long entries on the CCI on the hourly, and that corresponded with this range here on the 4 hourly, but it also corresponded with the that range there on the daily. So you can see there, as long as the daily, the 4 hourly and the hourly CCI moving averages align, they're good entry points potentially. Notice here on the hourly chart, you would avoid going long any one of those points there. Even if the close broke above the fractals, you're in a downtrend, so avoid going long during that period. So that would have been another potential area to go long on trades. Another area is to look at more closely is this point back here in July 22. Now you'll notice that was the start of the previous hourly uptrend, and where that is this point here. Now I do highlight this as an example where you should be cautious. That's at that point there. Notice the CCI and the moving average CCI is in a downtrend. So the only place that's in an uptrend is on the hourly. On the 4 hourly, it's in a downtrend. And back here on the daily chart, that's also in a downtrend. If you pull out, you'll notice that's a very high, it's a very diverged distance from the moving average. So again, very risky going long when both the daily and the 4 hourly are in short positioning and the hourly is in long. Now in this case, it would have been a potential nice little trade, but again, very risky trade in my opinion. So avoid doing that if you can avoid it. At the very least, you try and make sure if you're going to trade on the hourly, try and make sure the 4 hourly moving average is in an uptrend, if not the daily. So I'll give you just a couple of little tips there how to try and maximize the probability of success when you're trading, so you're not sort of caught going in a negative direction. Anyway, to understand how to properly trade using some other trading ideas, reference the links in the description below, subscribe and like the channel, and see you in the next video.